Good afternoon. Welcome to the latest in our series of interviews. It's deep in summer. I'm based in Dubai. My name's Jonathon Davidson. I've been a lawyer in Dubai for nearly 20 years, God forbid. Today, we are talking about all things Lexolent. Today, I have with me Nick Rowles-Davies, who has been in the world of litigation funding for over 20 years, since he was a very young child, obviously. Nick has a very exciting new project called Lexolent, which I am also very excited to be involved in. And so we're going to spend not so few moments today talking about Lexolent, understanding a little bit more about what it is and what it means for the market. So Nick, welcome to our summer interview.
Pleasure to be here, Jonathan. Thank you.
Very good, very good. So Lexolent, we're at lexolent.com, Lexolent. And I guess my first question has to be from the CEO of Lexolent, Nick Rowles-Davies. Can you tell us a bit about how you originated the idea and how it works?
Yeah, it'd be my pleasure. The idea came from a number of investors that had been investing in the marketplace in litigation finance over a number of years and suggested to me that they wanted access directly to investments that previously they wouldn't have had access to, because their investments would be in a manager or a platform which gave them access to litigation finance, but that can be expensive, and they wanted to diversify. They wanted to get access directly into investments as well as into the managers. That led me to think that there was probably a marketplace where one could match the origination, so the cases in which one could invest, with the investors. And that was really the genesis of it. That's where it started. And it's grown into something slightly different in that it is also, of course, the only legal finance platform and community and network in the world. And it's turned into a place where not only does origination meet capital, which was always the plan, so investor members meet law firms, meet brokers, meet other people that can introduce cases, but it's also somewhere that people can showcase their talents if they're an expert witness, if they're an arbitrator, if they're a barrister, or if they're a law firm. And a lot of the transactions or opportunities we see come without lawyers, and we can place those with our network members. So the origin was a simple marketplace for origination to meet capital, but it's turned into so much more.
Okay, so an eBay, if you like, or an Amway, for those who remember such things.
Not dissimilar. It's sort of an Amway because we have the whole network, and the network members market to each other and to us, and there are many levels of that, and they refer cases onto the platform. So certainly partially Amway, but probably a combination of eBay and Amazon in terms of a platform or a trading platform, and we can talk a bit more detail about the different levels of that. But it's a place where people that have cases to be funded are able to meet people that want to fund cases. So yeah, absolutely.
And I guess globally, because this proposition is global, because it's a technology proposition, right? The platform, as I understand it, will be technologically advanced and will have global reach. So ergo, I guess you've got people around the world, and they could be pretty much from any professional background. They could be brokers, they could be insolvency practitioners, recruiters, anybody who has a conversation in a restaurant or a bar or a meeting whereby someone says, we have a piece of litigation. We really don't have the appetite or the funds to be able to fight it. We feel quite vulnerable. Let's try and connect with an organization who can find funding for us, find experts for us, and let's have a helpful conversation about whether we can put a package together to take that forward. And will the platform, so the e-platform that I understand is coming together, what timelines do you have on that? And I guess a short summary of what you hope it will achieve.
Yeah, of course. So it should be live for members from the 1st of October, with testing starting within the next few weeks to go through September. So that most of the tech has been built. We've just got to make sure it works properly for obvious reasons. What that means is, at the very basic level, it's a place where investor members of our network will be able to access, through a virtual data room, various documents and information that relate to potential investments that have been put on there, by the network members who have the cases that need funding. That's in its most basic level. So an area where origination meets capital, as I've said before. But there are other elements to that, and they will increasingly grow over time. The starting point, the next stage, is effectively software as a service. We have some artificial intelligence and some machine learning algorithms that are being put together in terms of 3 different elements. The first being scraping the internet for potential cases that the algorithm has identified that fit potentially the right criteria and ratios for funding in terms of litigation finance. The second is, because of the volume that we're starting to see, and it is growing because the network is growing, so we're seeing an awful lot of origination, an awful lot of opportunities. Therefore, we need to make use of artificial intelligence in terms of triaging those cases so that we don't have to take on many numbers of people, and we're trying to run things in an efficient and lean manner. And then the third is the predictive analytics, which allows us to compare historic case data of tens of millions of different outcomes with the variables that we have in terms of cases that we're looking at. And that will assist the underwriting teams to not to make the decision, but to give them indication of what has happened before in similar circumstances. On top of that, we have an e-learning and conferencing program that's coming at the end of the year and beginning of Q1 next year. There's potentially a recruitment element to what we're doing, and probably much more to come. But clearly, we need to finalize the first steps and then move on. But it's very exciting. The network's growing, the membership's growing, and the members are really keen to interact and learn from each other and refer cases. And it's a really healthy marketplace, but also a really healthy community.
Well, that's interesting in itself, isn't it? Because once you create the portal, the outreach, the membership, the critical mass of that membership can grow fairly exponentially in the professional services world. And then the portal can then provide, I guess, all sorts of things, whatever the membership is looking for. The organization that Lexolent can then go and source those SaaS services or those SAP services, services of software, etc., and present them to members in a way that members have asked, to be provided.
Yeah, completely. And we've already had members asking it. So the system that we're building has its own CRM system, and it has its own case management system. Obviously, access to the AI and that type of other add-ons is useful, but there are many smaller organizations out there that don't have a CRM or case management and want to make use of what we can provide on the system. It's at the starting point, it's a community for legal finance and a place where people that have cases that want to be funded can meet people that want to fund cases, but that's at a very basic level. It's much more. And as time goes on, I'm sure, and I know from other service providers that have asked to join the platform, there will be access to all sorts of different things that people in the legal and finance professions may or may not want to make use of. But the point is, it's there and they'll be able to opt to take it or not. So once you have a community which grows and is of the size that we're talking about, absolutely, you can add on different types of services that are benefit to all of the people that want them. And that's really one of the great things about it.
I would imagine name dropping slightly lesser organizations like Bloomberg and LexisNexis and the like, that is a sort of, at least conceptually, that is something which Lexolent will be looking to move towards in terms of scalability, in the width of services, etc. That's very interesting. So in terms of investors, the litigation funding market, my understanding of it is that it's been a very conventional market. There are people who have become very niche professionals. There are relatively, maybe tens of them, up to 100 of them globally, who are ranging from the top end, maybe only 5-10 players right at the top of the market, and it scales down from there. And they are very niche. And you have 20 years in the market. I know that your team at Lexolent have come with you through your various the service offerings you've had as a senior professional, and so that skill set, that experience is now with Lexolent. Will you be working with the conventional funders? Will you be working with new money that's less familiar with the market? Because what I'm seeing is the opportunity to educate the wider investment market. They could be family offices, they could be hedge funds, they could be those types of things, to get into this asset class. Is that on the mark?
Yeah, and it's a really good question. the first thing I would say is the existing funders in the marketplace shouldn't see us as a competitor, albeit we are going to be looking at cases that maybe they're looking at. And the reason I say that is we have our own fund. We've had the first close. We're making investments and we're open for business. But we're not a huge player in comparison the likes of some of the larger listed entities in the industry. That said, we have a network which provides literally hundreds of potential opportunities for investment on a regular basis. And we can only invest in a certain number of those. So we should be seen as an opportunity for those organizations to get access to origination that otherwise they may not see. Now, all right, they might see some of it in any event, but the large majority of what we're creating in terms of the origination is coming from places that historically people didn't refer cases. The network's global, of all types of introducers, from legal recruiters to accountants to retired professionals who are making phone calls and sending us cases. So the origination is probably new. And the reason that there are existing well-known funders on our platform is because they want to have access to that origination. And that's very sensible, and we're doing deals with them. However, the point that you make about other potential investors that perhaps haven't had access to the asset class in the past is also a really interesting one, because we have a cohort of investors now from high net worths, ultra high net worths, single and multifamily offices that previously would have found it difficult to get access to litigation finance or alternative investments such as litigation finance unless they invested in an LPGP structure. By coming onto the Lexolent platform, they have two options. They can look at cases on their own, but what we're seeing, and this is the really interesting part, is a sort of copy trading element where we invest because we have our own fund, and therefore we then offer the cases that we're going to invest in onto the platform by way of syndication or secondary market trade on day two, because that's the mandate of our fund. Those alternative investors that have never previously been involved are now saying to us, okay, well, every deal that you do, we'll take 10% off. We'll copy trade. We'll effectively create a version of eToro, which is for litigation finance. And that's really interesting and very useful because it allows us to recycle our capital more quickly. So yes, there are a whole range of investors, from existing litigation funders to LP investors in litigation funders who are looking for an alternative, to high net worth individuals and single and multifamily offices that wouldn't have invested or wouldn't have had the ability to invest directly into litigation finance before, but now have the opportunity because of the platform. So we're really trying and hopefully opening up to a whole new range of investors to get access, and that's quite exciting.
Well, no pressure, because I guess what these organizations are saying is that, Nick, you and your team know what you're doing. You're going to put your money where your mouth is. You're going to invest. You're going to take a percentage of any particular investment or portfolio investments. When we see you do that, we're going to follow you in, and there could be 1, 2, 3, 4, or 5 of us. And between the consortium, it can fund a whole portfolio or fund a whole large case. So that's interesting, and I guess with your history and experience and that of your team, then your track record will start to flow. Your independent track record now, and I guess we're going to start to see how that business model evolves over the next year or two. Generally, in relation to the litigation funding world, and I guess you did touch upon this earlier, where do you see it evolving? Where I see it is, it has been very specialized. It's been very undersaturated. It's been a little bit kept behind closed doors as relationships between large litigation law firms and private funders or listed funders. And now it seems there's a lot more people talking about it. It's coming slowly into the mainstream. Do you think that's the case? And how do you think Lexolent fits in with that evolution?
I guess the answer to that is the direction of travel is only one way. And for the last 20 years, litigation finance has been growing and growing and growing. And there have been some setbacks, and there are recent rulings which the world will tell us means difficulty for certain regions, certain jurisdictions, and certain funders. But the reality is that litigation finance is here to stay. It's been around for a long time. It's embraced across the world, and the direction of travel is, as I say, only in one direction. And that's positive and growing. Now, historically, it might have been considered as an extremely risky asset class because of the binary nature of the outcomes. But I think portfolio theory and the way in which funders operate and make their investments, if they're prudent managers of their money and they are careful about their concentration and the types of case and types of jurisdiction they invest in, then ultimately the performance of the likes of Burford tell you that there's money to be made in the asset class. And what that, of course, does over time, Burford's listing in London and in New York means that the asset class is talked about in a different way. The changes that have happened in the industry from the methodology and fair value accounting and that type of thing, again, as the industry progresses and increases, means that people are much more comfortable with what goes on. And then you start to see funds that are setting up, and there are some now that have raised significant amounts of capital for the secondary market. And that suggests a maturity in the asset class, because if you're having secondary market trades, we've been around long enough and we're starting to become a much more mature and stable asset class. So the direction of travel is positive. Things are becoming much more mainstream. I think the holy grail, of course, is ultimately when people refer to litigation finance in the same way as just another form of corporate finance. Now, I've spent 10 years talking about that from a corporate portfolio perspective. And the reality is it's still very hard to persuade corporates to use external capital because of the cost of that capital. But it does go on. It is becoming more commonplace. Burford's been a leader in that. I was involved in a number of those large transactions. And again, the reality is that the world of business has woken up to the fact that there are alternative methods to pay for your dispute resolution costs, and they are substantial, and it has a big impact on your P&L. So over time, and it's taken a lot of time, and there have been retrograde steps during that period, things really have matured. And I think we're in a position now where, from a timing perspective, the opening up of the asset class to other types of investors, as we're trying to do, is probably right. And it feels that what we're saying to investors and how they're receiving it is that they're embracing the challenge and pleased with it. So I hope that possibly has some way to answering the question.
It does. Thank you for that. I guess so. One of the last things we can touch upon as well is there isn't a sort of a David and Goliath story. If one was a layperson looking at the litigation finance industry, then I guess I mean, you talk about the corporate portfolios, and we're seeing more and more of the corporates trying to take their litigation risk off balance sheet. And by that, I mean taking on board third-party funding. That's happening relatively slowly, but I know the corporates are looking at it. The very large ones are looking at it more and more. It'll be interesting to see how that evolves. But traditionally, what I've seen is there are claimants or potential claimants who are in a squeeze. They're in a bind. They need all of the money that they have for growth, to sustain, to stay strong, to try and stay in their seat in terms of market competition. And to spend money on claims, historical claims, is really probably not a particularly useful utilization of those funds. So if you're a mid-cap company, you're in a bit of a bind, you've got some contracts, you've got 20, 30, 40 million out in the market that's just not coming in, you need to take claims. So I guess those are the Davids in the piece, and it may be David against David. You know, there could be the other counterparty could be saying, well, we're pretty tight as well, guys. You know, we haven't got the cash, so let's give it all to a judge or an arbitrator, and let's see what comes out the other end. But there could be the Goliaths at the other end. There could be large corporates simply saying, well, we don't think this counterparty has the muscle to be able to come at us, so we're gonna play hardball. And with funding, I guess, first of all, the fact of funding puts the counterparties, the defendants, at unease, if you like. And implementing that funding into the case means it becomes an even playing field. I guess I'm not looking for an answer. I'm just sort of surmising in my head how the sort of the picture plays from a layperson's terms. I mean, have you got anything to add to that?
No, I think that's right. The David versus Goliath access to justice argument is one that's been run since the beginning of litigation finance. It levels the playing field. If you have a defendant who's a large corporate and they're going to operate a scorched earth policy in terms of legal fees, often the claimant or plaintiff is in some difficulty financially, and legal fees are high, and big ticket litigation costs a lot of money. So yes, absolutely. David versus Goliath has always been an argument. It's not the only argument, because even a prudent corporate, again, subject to pricing, can defray their legal expenses. Every dollar they spend, every pound they spend on legal fees comes straight out of their bottom line and affects their EBITDA and their P&L. So from the perspective of anybody, it's certainly worth looking at. Whether they get to the point as a corporate, a big corporate, saying that's what they want to do depends on the general counsel and the budgetary pressure on the CFO. But as we've seen in some big corporates, it does happen. But back to David versus Goliath, that's one of the big ESG elements of litigation finance. You know, it's wholly inappropriate for a startup or a small company, and it happens all the time, to be forced into taking a settlement or not receiving capital to which they're entitled because they just don't have the wherewithal financially to fight a large defendant. So that's where litigation finance comes in, and it does level the playing field and it avoids that scorched earth and effectively creates a balance. And that's one of the great things about it.
Super. Well, I've learned scorched earth, deal flow, capital meets origination, and I'm going to continue to try and learn all of the terminology so that I can act a little bit more knowledgeable after this interview than I did before. But so I guess
even Lexolent.
Exactly. So yes, I want to look Lexolent. So the takeaways I have are that there is a tech-heavy portal, a website which is going to provide software and other services, and that's going to be coming live, and we're going to be hearing a lot more about that in Q4. And that will try and bring the world of legal tech and legal finance and professional services together, and we'll start rolling out services and membership and all that sort of good stuff. Sitting alongside that is the traditional concept of litigation funding, which we've been discussing, and that is bringing new investors into the market, working with existing investors, and also having Lexolent having its own regulated fund to be able to invest or co-invest in cases. So that's the takeaway. And I guess what I could invite people to do is follow Lexolent, Lexolent, on LinkedIn. Have a look at the website. It's lexolent.com. I will be probably about once a month conducting interviews like this with other industry leaders around the world in the fields of legal tech, in legal finance, in all of the new modes of professional services and finance and legal, and trying to understand more about where the market's going. And I think there's a good thing. I looked on the website, Nick. It's the dynamic space where money meets the law. So that's quite interesting, and it looks to me as if it's only going to get bigger and bigger. So, Nick, I'd like to thank you very much for joining me today, and hopefully we'll take a look again in a few months to see how everything's going. And best of luck, and thank you very much for taking the time.
Pleasure. Thank you very much.
Cheers.